All right, guys, welcome. Welcome, everybody. Hi, everybody. All right, so Money Mike's here back with another video. So, in more important things to talk about, or some of the most important things to talk about. Now, I'm starting with ETH instead of Bitcoin today because you have an interesting situation going on here. And I want to dive into it. Not gonna take too long. I'm gonna still continue with the Ethereum analysis, Bitcoin analysis as usual. But let's just have a look at what we have going on here now. Yesterday, I talked about how not to fail in the crypto market, part number one. Now we're going to look at part number two. Now, to recap from where we were before I start off with Ethereum, one of the things that's very important to remember is when we look at a crypto, we want to understand its market positioning and who are the market participants. Now, as a rule of thumb here, generally speaking, okay, not all the time, but in terms of generally speaking, I'm going to write this here. The cryptos within the first 100 cryptos have, and this is important, the first 100 cryptos list. What am I talking about here? I'm talking about CoinMarketCap or CoinGecko. All right. Now, the first 100 cryptos on these sets of lists here are around about the same. So these cryptocurrencies within these first 100 lists here. So if I go for examples, so things like XRP, okay, Ethereum, all right, Bitcoin, and etc. All right, these ones are even within the top 10 list, but the cryptocurrencies in the top 100 list of cryptos are more likely to have institutional money within them compared to something that's 3,000th on the list. Okay. Now, it doesn't mean it can't gain institutional money, but it just really does depend on quite a few factors. Okay. And I told you last week that the main one was legal. Now, what I'm going to do, I deleted it here, but I'm going to pull it back up here for you guys to see quickly what we're looking at here. So if I put this here, it's my recording monitor to let me know that I'm recording. So if we're looking at what we have here, all right, the cryptocurrencies within the first 100 list, for example, XRP, Ethereum, these are more likely to have institutional money or large amounts of money in there compared to something, again, that's 3,000th on the list. All right, so I'm going to open my deleted chart, which is one thing I love so much about MetaTrader that you can do. So let me just pull this up here for you. I believe I use Bitcoin to map this out. Here we go. So we talked about this yesterday, about the barriers to why crypto is not something that is massively used and known. You know, adoption barriers, legal barriers, barriers of entry, exposure. And I'll add one more in here as well from the recap from yesterday. One of them would be technological. Okay. Technological. Now, this is quite a light one because in reality, if money is driven into this, then the tech, I won't even put this. It's okay. It's not even worth putting in here. The reason why I'm changing my mind on that is there are barriers to the technology available, but to be honest, that is a barrier that is very, very lightweight because if more money comes into these projects, then they can actually be able to do what needs to be done in order to have the necessary technology and infrastructure. So really the barriers to entry for institutional money is legal, okay, monetary and exposure. Now, if you think of it this way, if Bitcoin is going to go to 1 million, which is what the aim is, all right, if Bitcoin is going to go to $1 million a coin, then every single time the price increases and makes a new all-time high, all right, or even just goes up in price, then the barrier to entry to owning one Bitcoin becomes less and less and less. All right. So as time is going by, this is one of the biggest things that you need to think about. All right. Because for now, that the barrier to entry is going to be the price of the asset to some degree in terms of money, but then it depends on each person. So it is quite subjective. If we say the barrier for entry for one Bitcoin definitely is increasing, but in terms of the barrier of entry for crypto, is going down day by day, because as more people use crypto, more infrastructure is put in place, more laws are used to support it and things of that nature. The more exposure, the more money is driven in. So we have this kind of cycle of, the more celebrity exposure, the more event exposure equals to more money coming in, which means the barriers to entry go down, but then prices go up. So the later you are to this game, the worse off you're going to be in the future. But you just don't want to be the last one. If you're the last person to get into Bitcoin, so when Bitcoin is 1 million, that's when you decide, yeah, I want to buy a Bitcoin. Bad idea. All right. So looking at what we have anyway with crypto, these are the things that we're talking about. So in terms of market topology, I'm going to go back there. So crypto market topology, right? So retail traders will be number one. They're the first people to get into crypto. And I split that into different groups, which we talked about last week. Well, excuse me, not last week, yesterday. Seems like last week though. The founders, then early investors, and then public investors, but still retail. And then the next level was public figures with deep pockets. All right. So celebrity figures, business professionals, things of that nature, and maybe secretly some government professionals too, who knows? All right. The one beautiful thing about crypto is that, not that it's a bad thing to be off the books, but you can be legally off the books if you put it that way. So if you find, for example, I think a very well-known Bitcoin place where you can get Bitcoin outside of an exchange, so in a different way, is, I think it's called Bitcoin peer-to-peer or something like that. Somebody can comment in the comments below if I've got it wrong, but it's something along the lines of that. So looking at what we have here, when it comes to Bitcoin and the rest, these are some of the levels of money that we're seeing in. And then the next level after that in the crypto market is institutional. Now, what really caused the prices to increase are going to be institutional traders. But I want to make a point here, which is important, okay? One of the major points that you need to remember is that when it comes to pension, hedge funds, mutual funds, and all of these kind of levels of money, in order for there to be really the level of adoption that I'm discussing, or the level of money to go in there always has to be a few things, again, that needs to be put in place, which is going to be legal. But also, one of the biggest things is going to be how they purchase. All right. So I'm going to focus on that in a moment. I think what I'll do, I'll use the Ethereum chart that I just brought up here. It should be somewhere here. All right. So this Ethereum chart here, I'm going to leave these markings here. Let's just talk about how institutions buy. Okay. How institutions buy crypto. Okay. I'll make it as simple as possible. So if a crypto is allowed to be bought by an institution, what do they do? All right. So if I was to put this here, first thing they're going to do is look for, is going to be OTC buying. Okay. OTC buying. So one major form that institutions are going to buy with is OTC buying, or over the counter. Now, why would they do OTC buying? Number one, okay, keeps market prices stable. Okay. You have to imagine now, if you're, we can think about this as people in a swimming pool. So if you're, there's 20 kids and all of you are skinny, small kids, in the water, all right? And let's say you're in a closed system of a bathtub and you're all inside of this pool, all right? If somebody that's really large enters into the water, or let's say dives into the water, we know that they're going to make a massive splash. Now, I know it's not the most, probably the best example to use, but I hope you guys do get the point. What am I saying? Institutions, another good term for them are whales, okay? Institutions, I haven't even spelled it correctly. Let me change that. Institutions. Did I do this right? I can't even see. Institutions. all right, to buy crypto. Let me make it as grammatically as correct as possible. So how does institutional money buy crypto? So a whale is another term for institutional money. So money that has the ability. Now the whale is the largest animal in the sea. Okay, largest animal, to be honest, alive is, I believe, the blue whale, largest whale in the largest animal in the world. Now, because of that, it is the king of that ecosystem. And so whatever the whales do, their feeding patterns, their breeding patterns, affects the entire ocean or the pocket of water that at least they're in. All right. And this is the same picture that we see when it comes to crypto. Okay. So if a whale purchases something on a market and you can see the market, imagine the market to be an ocean, then it is going to cause there to be some activity or some sort of reaction. Okay, so it keeps the price stable. Now, what does this, how can you put this into a better perspective when it comes to the market? If a market cap here, so if I was to write this here, let's do some maths. So if the market cap of a crypto, all right, and this is before whale money, let's put that there, before whale money, let's say a very decent 100 million market cap, all right? And let's say that they have a token supply of, I don't know why I put dollars there. Let's make it very easy. 100 million tokens of X, all right? So X tokens X or token X, all right, is what they have. All right, so in other words, in terms of price, how do you work out price? Price is going to be the market cap divided by the total supply, all right? And that gives us price. So in this case, if we do this, 100 million divided by 100 million equals to 1, all right? So in this case, $1 for one token, $1 for one token X, all right? So this is this simple equation that we can use to work out things for the future. Now, so let's say institutional money comes in. Yeah. Let me put this right here. If I go for, let's say they put now 100 million into, let's say they, okay, I won't put 100 million because that's not going to make sense. But let's just say an institution wants to have 20% share in the current supply. All right. If they wanted to have 20% share in the current supply, it's going to cost them 20 million. Okay. Now, this is where the maths gets a bit weird, but you just have to follow me to understand this. Now, there's two ways they can do this primarily. All right. Way number one. So way one equals to buy from an exchange. Now, remember, an exchange, guys, as we talked about yesterday, the price that we see or the price that we get for a crypto, all right, is varies between different exchanges because each exchange has a certain amount of cryptos within that exchange system. Okay. So that's the first way. The second way, way number two, okay, I'm gonna put this here, is to, right here, OTC purchase, all right, over the counter. So OTC purchasing, what does that mean? Very simply, they're not going to purchase on exchange or they won't buy on exchange. So I put this here, what happens? So buying via private peer-to-peer purchasing. Now, let's say for the 20% supply, so it could be multiple people, it could be one person. So if they find somebody that has a 20% share and they want, that person's looking to sell because maybe they bought it at, maybe 20 cents and they're happy with the profit they've got, then they'll be looking for a buy. If they want to shift it all, instead of doing an exchange, which to be honest, with an exchange, they probably will block you from doing such a thing because it has too much heavy effect, or there'll be too much of a heavy effect on the price. All right. If you have the crypto holding in your wallet, then you could do a peer-to-peer transaction where you meet somewhere, you set up a contract or a deal, and then one person sends the crypto, the other sends the money. Now in the UK, we have something like that called MT42, which is a type of bank transfer where the bank, which acts as the intermediate, will receive the Bitcoin from the sender and the money, and also proof of the money from the recipient. Okay. And once both parties are, or both sides have been seen, okay, the bank will then make the swap. This is to protect people from being stolen from, because if you send your Bitcoin to someone who promises to send you the money, once it arrives in their wallet, that's the end of life if they don't send you the money. And at the same time, someone can say they've got the Bitcoin, for example, but they don't, and you send them the money, and then the person disappears into the moon forever, and then takes the money and actually buys Bitcoin with it and disappears. And there's nothing you can do. So that way allows, so the bank kind of acts like a smart contract would, and it becomes the intermediary. So, but in this case, the bank is actually not a set of code, is actually an institution. But anyway, from that picture there, two parties have to do something, and then the bank is the facilitator between the two for commission. So that's what happens usually with OTC purchasing in that way. Now with OTC, they're going to have to source people and track them down to actually find out who's holding that amount that they want, and then they can do the purchasing. Now with way number two, when they do this, what happens? So if they wanted to buy this 20%, all right, so if they put, so in other words, if they, I'm going to put here $20 million injection into, so that $20 million injection here into the project, all right, if they put that into the market, then it's going to, the total market cap, all right, value effect will be zero. Okay, and the reason why it's zero is because all it is we have it. I'm going to put this here so that it can make sense. We just have, in a sense, a change of ownership. Now I know that on the exchange is the same thing, so we just have exchange of ownership. Okay. Oh, so we have an exchange of ownership, which is, hear me, off exchange, but on chain. Okay. So it's still on the chain because in order for the crypto to be sent, it has to go from one wallet to another. So it's off chain, and sometimes even, you know, from a variety of wallets. And so it doesn't affect the price too much. Now, it doesn't mean it doesn't affect the price at all, but the reaction to the price is very, very low. Okay. So for example, with Bitcoin and Ethereum, institutions that are interested in purchasing some, really what they actually do is they try to source somebody who wants to sell their Bitcoin or Ethereum, who's holding quite a bit of it, and they would like to purchase some. That's how they do it. Okay. The reason they do it that way is because they don't want to affect the price. Because if you do exchange number one, what happens? All right. You've added, all right. And this is important for supply and demand. If you're not too sure what supply and demand is, please definitely go and look in the description below and find the 5-part course series, okay, called the Mastermind course. And in there, I teach supply and demand in more detail. But we have $20 million added to the demand side of the market. All right. Now, in theory, this will cause the price to go from $1, okay, to potentially at least $1.20. So 20% gain. Okay. But the problem is that when they spike the price like that, okay, it's going to cause the institution to lose out on money because the price is going to be higher. All right. Now, usually what institutions do for this to make sense, because you're going to think, well, if they bought there, then what's the problem? No, what you would see is when the price spikes here, usually institutions do multiple purchases on one exchange. So they might get some at $1.20, then $1.40. But if a huge spike in price happens, what's going to happen? Of course, that new money into the market increases the market cap quite massively, but then large retail reaction. So then what happens is that you have a reaction from retail traders who see this spike and it goes around the news and people start pushing the price up. And then it pushes the price up too soon to when they complete their purchasing. And then the rest is history. So institutions lose out, okay, they basically shoot themselves in the foot by putting so much money into a project, okay? And so it's their way, and for them to be able to move a bit more stealthily and also to allow the price to be more stable, okay? So even with Ethereum and Bitcoin, sometimes I do believe the price should be higher than what it is because of the amount of institutional money that goes into it. All right, but I hope that makes sense to you. So in this part here, how to not fail trading crypto, I just want to take this picture into perspective here. So talking about all of this, cryptocurrencies that are in the top 100 most likely have institutional money, which means they have, and I said it yesterday, the money cushion. So right now, the money cushion, the truth is, okay, until institutional money gets into a project or into an asset, is not really going to take off to where it is, because the ratio of money that's in, the average person compared to institutions is massively different. Okay, orders of magnitude of millions different. Okay, so in order for crypto to really take off and for prices to really go to where we want to, we need adoption. It's not that we don't. Adoption is only bad if you're trying to get cheap prices. All right, but if you're trying to get if you're already in and the price is going up, then adoption is good, because every time a new person, a new country, a new institution recognizes the value of crypto, the price should go up if they make some purchases. Okay, so money cushions. So money cushion is institutional. I think I'm spelling institutional wrong so many times, it's really bad. All right, but I spelled it correctly there. The other one's institutional as intuition, but hey, I know you guys know what I mean. My mistake for the bad spelling. So let's put this here. Institutional. All right. So moving forward here, so with the money question in mind, what would you do? How would you find out? All right, there's different ways you can find out. The easiest one to do, or the easiest way to find out what's going on, is just to look at holding patterns. Now, the holding patterns for each, for example, now I'm going to put this into different categories. All right. So when it comes to layer one blockchain, all right, layer one blockchains have a blockchain explorer. And so a blockchain explorer is basically a web page that has the data for all of the people holding that crypto. Okay, so blockchain, I'll put this here, explorers are a good place to start. So if you look at a blockchain explorer, it will help you to make a good suggestion as to what to do. Okay, so for example, for Ethereum, we have Etherscan or etherscan.io. All right. Now, cryptos who have used the Tendermint SDK software engine, if you want to put it that way, to start off with from Cosmos. So things like crypto.com and Binance, they also have their own similar one. So Binance has BSC scan, I believe it is. And you can also look at, so that's for layer ones. Now for layer two, and here's the key here, I'll give you a bit of a rule of thumb here. Now there are some amazing cryptos that you could trade and get a good one-time opportunity of. But for layer two projects, okay, now I didn't put the equal sign, but layer two is going to be projects built on a blockchain, projects built on a blockchain. All right. So projects built on a blockchain are layer two, and blockchains themselves, all right, the distributed ledgers are layer 1. Okay. So layer 1 and layer 2. Okay. So these layer 2 projects built on a blockchain. Okay. What you're going to have to do is find, number one, find out what blockchain it was built on. Okay. It's the first thing you got to do. So I'll put this here, make some space. So just a 2-part simple process. And this doesn't take as long as what I'm saying. I'm just slowing it down to make sure that you guys all get this. And then for the layer 2 side of things, here you go. Layer 2, or excuse me, level 2 or part 2 is once you find out what is built on, look for the wallets or the token holders. Okay. So I'll do a quick example and a demonstration here to find out. Now, the rule of thumb here is that for most altcoin projects, okay, especially things like DeFi and NFTs, most of them are built on Ethereum. So if you go to the Ethereum Ethernet scan, you'll be able to find them. So I'm going to do a very simple demonstration here for us to look at. Now, what are we looking for? So before I leave this page, what are we looking for? Okay. So how to spot a whale. Now, there's a few things here that I'm going to put some notes on and throw these out here that you can work with. So number one, in terms of holding, it will be someone that owns at least, I would say 8% or more of the total supply. Okay. Now we're talking business, 8% or more of the total supply. All right. And then I would say anything that's holding 20% or more is a big whale. Very simple, very childlike, a very big whale. Okay. Now, what's the difference here? So people that have an 8% supply, so 8 to 20% supply or more. So what is their ability? So in terms of market ability to cause. Now, this is just speaking about one person holding it. It has to be one institutional, one individual, one entity has the ability to cause a mini crash in price. Now, a mini crash in price means, I would say, losing 10% to 20% of the price value. Okay, probably going to cut off what I've just put here. It got up to PR. But why do we look at this? So when you're looking at whales and spotting holding patterns, you want to be able to be in a crypto that hasn't got the ability to be crashed at any time completely. Now, I mean, ideally, any crypto can be, but there are some cryptos that have economics that are more conducive for you to be able to be safe, if I put it that way. Okay. So for example, with Dogecoin, all right, and we'll have a look at Doge because I will say it, 4%, I mean, 4 people at the moment roughly own about 70 to 80% from what I last checked of the total supply. So in other words, there are millions of holders of Dogecoin around the world, but there's 4 people that control 80% of what Doge does. That is very bad economics, and that is probably the worst communist party in the world, Dogecoin. All right. So if you were to trade Doge as a crypto, it doesn't mean you wouldn't trade it. But personally, for me, if I was to make a choice between a few, I wouldn't trade Doge. Okay. Because at any time, and you know, we've seen it already when crypto was having the mini crash and everybody was crying and upset. Nobody expected it to happen. The price, there was no sign really. I mean, there were signs, but there wasn't really a major sign to say, oh, well, the price is going to reverse now, because most of the cryptos, for example, Ethereum here was already at a new all-time high. So there's nothing to the left of us for us to see any past price action to make any future prediction. Okay, if that makes sense. So there was nothing to extrapolate with really. So with these people, if there's a healthy amount of them, all right, So they're evenly spread. Now, I think I'm actually going to reduce this a bit more because I was saying 8%, but I think 8% is even a bit high. I would say between 5%, all right, and I'll say up to 10%, okay? Less than or equal to 10%, all right? Because ideally we want there to be a good enough spread across, you know, different peers. So 5 to 10% is possible for there to be a mini crash. You know, if someone loses let's say 100, well, if someone sold 10% of the entire, you know, price, in theory, doesn't necessarily mean it'll be like that. The reason why I put 10 to 20 as in double is because let's say if one whale sold 10% of the entire supply of a crypto, so we had a massive supply shock, is going to trigger retail activity for people to start to sell too. So I am doubling up the figures because whatever the institution does, I'm sure people will start to sell as well, which will cause a panic and then possibly cause people to sell off too. Some people will be scared and take their profits too early because they think the crash is coming or something along those lines. So this is why I've doubled it. Just a rule of thumb. So whatever institutions do, the price will probably have a double effect. That's my ratio that I've gone for. All right, that I've seen anyway. So these are things to spot a well in that sense from holding patterns. From trading patterns, okay. And there is something called wash trading, which is when we'll do that tomorrow, but this is when exchanges generate artificial volume, okay, to get people to buy for things that have low popularity or liquidity is lower, but they try to generate high volume by buying and selling large amounts that they own to kind of get people into trading it, which is not a good thing. But anyway, if a crypto has wash trading, I would say stay away from trading that on the exchange because exchanges are responsible for doing wash trading. All right. So anything I would say spot in a well will be from 10% up, and I'll say 20% or more is going to be a high danger that you if I put this here, high danger of market crash or price crash. All right. Yeah. So I would say to you that if we're looking at price action from that perspective, 20% or more is a high danger of crash. If there's a crypto that has, let's say, 20% held by one entity, okay, so that means, in other words, 5 entities can control the whole thing. I mean, okay, ignoring retail traders for a minute, potentially in theory, 5 people can control the whole thing, which is not good. All right, so we want to go for a larger spread. We want to see where we see, you know, a lot more, I would say, or what is positive to trade with is where you have lots of, you know, 0.8%, or let's just put 0.5 to 1% holdings. Okay, so this gives what they say, gives a larger spread. Remember, guys, this is not some course that I've created or anything. This is from my heart, just sharing you some tips that are going to help you. So we have it gives a larger spread of money. Okay, which means that we have a lower chance of the price crashing because of one person wanting to pull out. So in other words, it allows it to have a healthy balance between volume and liquidity on exchanges and on markets. All right, so this is what you want to look for. All right, so when we're looking at projects here, you want to make sure you keep your eyes peeled on these kind of things, all right, before you go and dive into a crypto. Now, there are some cryptos that are in the top 10 that don't have this, and that the holding patterns are a little bit different, but still, if you were to make some choices, you know, you could definitely go for them. And even ones here, now I'm giving you guys the safety road. Doesn't mean don't trade Doge. I've traded Doge many times over. Okay, just because Doge is doing that, it has 4%. I'm saying doing that. That's my UK coming out, but the UK side of me. But just because Doge has 4 people who own 70 to 80% of the supply, it doesn't mean that you can't trade it. Investing in it, that's a different thing, but trading it, it doesn't mean you can't trade it. Okay, because Coinbase, for example, has listed Dogecoin recently, and Coinbase is one of the largest exchanges in the world. So you have to balance it out, okay? And this is one of the other points that I'm going to come to here, and that's my final point. All right, so on a side note here, all right, rule, I'm going to put rule here. The more exchanges the asset is listed on, the safer, okay? It is. Okay, this is just a simple rule. So for example, on Ethereum, you can check this out on CoinMarketCap again. Ethereum is probably listed on at least 100 exchanges. I'm sure there's about 100 from last time I checked, or some between 86 to 100, something like that. All right. But if you find a crypto that you want to trade that's listed on just one exchange, okay, and has a low market cap, then I would say to save yourself the trouble and get away from trading there. Okay. Now, remember when you're trading crypto, okay, and this is when I'm talking, guys, I'm talking about trading, for example, with Binance futures. If you're trading CFDs, you don't have to worry about anything I'm saying right now. So if you're using Hugo's Way or another Forex broker that provides crypto, and you can trade just the CFD movements of these cryptos, you have nothing to fear. Because at the end of the day, you're not holding these cryptos, you're not owning the cryptos, you're only earning from the price difference between them, okay? With Bitcoin futures and stuff, it's a little bit different. So you don't want to be looking for, you don't want to get the low liquid ones. You want to get the ones that have some good money, some good spread in there. Because the low liquid ones as well, biggest problem with it, high fees, which you don't want to. So that creates a higher barrier to entry. Anyway, let's just do a quick example. All right, I'm going to go to, let me pull up one here. Let's have a look at etherscan.io. Let's have a look. All right, here we go. So Etherscan, if you go on here, one of the great things is that you can search by address, transaction hash, block, token, or ENS. All right. Now, if you wanted to work out something for crypto, so let's just say Ethereum itself. So if I go to Ethereum, you can put the ticker and it should come up. If you put Ethereum here, all right, it will come up with all of these different options that you can go for. All right, anything that was built on Ethereum, okay, and Ethereum itself. All right. Now, of course, I can't, if you put Ethereum as in to look for Ethereum, it's already right here because this is Ethereum. But let's say, for example, I wanted to find a project. Let's think about a DeFi project. So something that was built on Ethereum. Let me think of one off the top of my head. Okay. Let's look at Aave. All right. So Aave, okay, is a DeFi protocol that was built on Ethereum. So it tells you, first of all, the supply, okay, and it tells you right here the price, and then it tells you the market cap, okay, and all of these different other things. So here is the transactions. Now, what do you want? You want the holder's information or the token information. So here we go. Here's the holder's information. Now, the percentage here tells you who owns how much, okay? So it tells you, it always gives you the top 1,000 and it tells you the total of 92,727 holders. All right. Now with things like Binance, okay, it will tell you over here how much Binance owns. This is the public tag. And then Aave that's staked in a smart contract, it will tell you. And then over here, of course, we wouldn't see. And then Aave token version 2 will be given here. All right. So for certain cryptos, like for example, SushiSwap, Huobi, DeFi Pulse Index, the FTX exchange, things like that, it tells you how much is here. Now with Aave, you can see right here on the first page, there's a lot of 0.1, 0.2, 0.3, and there's not that many, all right, 5% and above here. So from what I'm looking at, if we start from number 10 going down, we have people that are from 1.4% all the way down to 0.16%, okay, of holders. So in terms of Aave, okay, the amount held is quite evenly spread. Okay, now there is a few people holding here that are large, or the few holdings that are large, but these holdings here, and this is where you need to put your hat on, is you're going to have to look to the left to see what happens. And here's the rule of thumb. If it's an address that's unidentified, then that might be a problem because it's going to be most likely a whale. But if it tells you what it is, for example, here, this is a smart contract. This is Aave that is being staked in the DeFi protocol for earnings. So this is not really a whale. This is just the accumulation of Aave, okay? So at the moment, there's 3.167108 million Aave staked in this smart contract here. Okay, now this one right here is not public tag. This is private, so we don't know who this is. And then we have over here Aave version 2, which is to do with the part of Aave's second version of the DeFi protocol and whatever is going on there. All right, and then here we have Binance. Okay, and this is probably from the Binance, which is either the public Binance held or the Aave that's held by people on the exchange goes into this wallet. And this is how you find out. Okay, so this is how you're going to work it out here. Now you see, as you go further down with the numbers, the percentages go down, and we start to see here these addresses here, as we go down, start to have no contract on the side. Now, again, this on the side here is a very useful piece of information. If you see an unknown address, but it has a contract sign, it means it's a smart contract. Okay, it means that there's money being held in there for some sort of rule within that economy or DeFi protocol or whatever it is that is doing a certain action. Okay, if you don't see the contract signed, then it's a wallet address. Okay, so over here, for example, we could consider, let's pick one right here. So there's an unknown person that owns 125,000 Aave. They have a 0.78% ownership of in terms of the total supply. All right, and the address is unknown. The person is unknown. The address is known, sorry, but the person is unknown. So trading Aave, is it a good thing? For sure. Aave is a very clean one to trade. Okay, very good, publicly available, and it tells you quite a few things. Again, here's the Banco, for example, which is another DeFi protocol. Here's Gemini Exchange. Here's Aave token. So you see, we have quite a few over here, and it helps for us to be able to make assumptions as to what to do. Okay. Let's pick another one. So something else built on Ethereum. Now, this time, what I'm going to do, let's go into CoinMarketCap here. And I'm just going to pick a random page, all right? So don't judge me for it. I'm just going to go here. I'm going to pick something from far ends of the page here. Let's just go for, let's see. Now, I want you to also hear me out on this. So just if something is listed on an exchange, there is a different level of notoriety and respect a cryptocurrency project has depending on where it's listed. So for example, if a crypto is listed on what I call tier 1 exchanges, so Coinbase, Kraken, Binance, okay, those three, and KuCoin right now, number 4, those kind of exchanges there, if something's listed there, then definitely, all right, it should be respected, and most likely, because Binance does go for extensive work to make sure that things are good, then they are safe. All right. But if the crypto is not gaining much traction, one thing I want you to pay attention to is that wash trading is most likely going to be a natural thing that each exchange will do. And the reason they're going to do that is because they need to generate interest in trading movement so that they can start to pull in money for listing this crypto. Otherwise, it's going to die and get delisted. And there's been times where Binance has had to delist some cryptos because wash trading didn't even help to keep them alive, and the interest died, and so the project died with it. Okay, and this is just basically what we have here. So let me find something here. I'm on, like, I don't know, the 600 token here. Let's see this one, DSLA protocol. Let's see if it was built on Ethereum. Okay, so it is. All right, we can actually click on it from here and it'll open up the Etherscan window for it. All right, so this has a market cap of 44 million, 9,433 holders. Now, just one thing you want to check when you're looking for things to trade now. I'm trying to expand your mind here because the only thing, you don't want to only trade just, I don't know, like the normal ones like Ripple, Cardano. There's other cryptos that have these 1000x gains. And if you have some good leverage and you can capture them, maybe the cryptos that have 1000x gains won't be highly institutional, but you want to be able to pick out what you're looking for. Of course, the safer version is to go for ones that have institutional cushions in them. But anyway, I digress. So Qcoin, all right, has a 32.97% volume, okay, of this. So Qcoin has the highest listing in the exchange pair is DSLA versus the USDT. And let's look at this right here. So if I go to holders here, how would we know if there's whales? Well, we just look at the project here and see what's happening. So from here, we have two contracts so far. Okay, we have the Polygon Matic ERC20 bridge as well here. So aside from that here, we have somebody holding here who is the main whale, and he's a 10%er, but we only have one. So ideally, if he sold all of his supply, the price should theoretically go down by 10% or 10.4, or based on the rule that I've given you guys, let's say 20.8, because at least we should have a mirrored effect from other crypto holders. All right, we have a 5%er here, we have a 4%er, 3, 2, another basically 2%er, and as we go down here, the numbers drop quite massively. So we've got MXC, which is another exchange here. We have a Stactical. So I think this is token sale contract. We have Harmony, we have Uniswap, and we have Qcoin. So you can see that the numbers drop quite drastically. So in terms of trading, this won't be bad at all to trade. Okay, it has a good market cap, 44 million. So it's quite liquid. And you should be able to get good fees and easier, comfortable spread, okay, with trading this. So let's say, and if you wanted to capture an opportunity, this has a low price point of what, 0.007. Let's say this was going to go up to, I don't know, 0.7, so 70 cents or 100x. If you have a good entry on this, you could be really looking at some serious money. So anyway, this is not really the topic of trying to trade it, but I'm just trying to give you guys a picture of what's going on. Okay, so this is how you want to do it. So whenever you're going to look into crypto that is not Ethereum or Bitcoin, which are the obvious ones, this is what you do. And this is the purpose of the YouTube. So I'm done with the teaching now. Let's just go through the charts here. I'm going to do some quick analysis. Let's have a look at what's going on. And then after we can go from there. So I'm going to bring back Ethereum. All right, now the major thing that's going on here is that Ethereum has been going long, even though Bitcoin has been going short. So if I go right here to where we are, let me just start from the hourly time frame. So if we have a look at what the price is doing, we've seen today that Ethereum has actually produced a long. We saw the price return back to the other side of the flip zone of supply right here. And this other return to the supply flip zone, the price has gone long from here. And we've seen the price go from just under 31 or under 3,200 all the way to, at the highest point today, 3470. Okay, so this is where we are at the moment, and I want to see how the price is going to fare out moving forward from here. And then from here, let's see what happens going forward. Yeah. Ethereum USD. So if I go from here, 3188, all the way to here, this is where we are. And if I go to Bitcoin quickly, guys, apologies. Don't know what I just did there. There we go. That's better. All right. Let's put this up. All right. So with Bitcoin, we've seen that into today, Bitcoin really hasn't had that bullish momentum that we saw. In fact, we had a bullish movement, but the price has pushed back down on the short side. Okay. So what is the issue? So Ethereum, I did say to you guys that there will come a time where Ethereum will start to break away from Bitcoin's heavy market cap effect on the market. All right. Now, other cryptos are following in suit. So if I go to other ones just quickly here for you to see before I continue. So Dash is kind of long and short, but not really much activity today. Doge, we've had a spike in price here, but the price has come straight back down. All right, from the 28, let's see. Some others, Litecoin. similar, but price is still shorting. All right, we have a OMG. I just call it OMG because when I try to say the actual name, I never say it right. So I just try and leave it alone. All right, so we've seen some of the cryptos follow suit, but they are still bearish. But Ethereum has shown the strongest signs of bearish intention. Okay, very strong movement towards the bullish side. Now, the question is, what's causing this? I've been thinking about this for the whole day as to what is exactly going on. And I think this is more purely fundamental in some of the mechanisms that are in play at the moment. But again, using just what we have here on Hugo's way, the price is still within supply at the moment. We haven't had that break past supply. The body of the candle hasn't closed past this area of supply. So we still have the potential for the price to go short. Now, what we were looking for was a market structure break here, which would have been a validation of a temporary short at least for the price to get back down to our $600 drop. Now, that can still easily happen. I will switch over to Trading View for the moment and then have a look at what's going on here. All right, but we haven't really seen much go on again so far on the short side. But if this was to happen, this is where I'll be looking for the price to go at least. All right. Now, I'm still saying this low right here, as a trader, there's inefficiency in the order book here that makes me think somehow the price is going to get here at some point. Don't know how, but or don't know when, but it will do, has to for sure for this to be balanced. But anyway, at the moment, Ethereum is still looking good for a long. What I would have loved to have seen though for that would be a body close above this area. Now, Ethereum USD on this chart is not even the best. Okay, I found a better chart that clearly shows what's going on. And I'm going to bring that up for you guys right here. So let me switch over to Trading View. I tried to balance it out for you guys to see the picture from both sides because it helps, you know, for your analysis and for your ability to read the charts well. So here we go. I'm switching over to Ethereum here. And let's have a look. So Ethereum from here, you see, there's two sides to the story. So on the higher time frame or larger picture, I should say, all right, this D1 demand zone here, I called it a long time ago. We were looking for a reoptimization of demand for supply. We had a massive drop, but no return. And then we've seen the price push back again into the same area. And we've had a wick above this high right here, which is important. And in order book economics, but it's not important for now. But what we're seeing at the moment is the price is starting to return back down, back into this area. Now, in terms of the entire area, we haven't broke outside of this area. But if the body of the candle did break outside of this supply zone, then I would be more, not concerned, but I mean more in the belief that the price will continue long. So if we get a body close above this supply zone, but not exactly above this area of demand, which has become supply since the price has flipped the zone area, then I would be looking for the price to continue going in the long direction. If we get a body close above this area here, then the next point we should be looking at is towards the 4K area, at least from 3,885 going forward towards the 4,000, we should be seeing the price movement. If not, and we get a body close inside of this zone too, now the price is only a few dollars away. Right now, the price is at 3,391, according to the price feed from Coinbase. Now, again, on a side note, if you guys want to trade or do your analysis, always look for crypto. This is important. If you're, for example, I use the example of Cardano, that I wouldn't analyze Cardano with Ethereum, with Coinbase, but I would do it with Ethereum. Reason is because Coinbase listed Ethereum very early on in the crypto verse that we're in at the moment. Okay, Cardano was only listed, I believe, this beginning of this year or last year or something like that. It wasn't very recent, even though Cardano was a very respectable project even back then. So the price feed from this exchange won't be as deep for me to be able to look at some deeper features of the price that I would like to use to be able to make good assumption as to what to do. Now, of course, because Ethereum's from then till now has made all-time highs, it really in a sense wouldn't matter that much. But for certain cryptocurrencies like Ethereum, Bitcoin, I wouldn't use an exchange that just listed Bitcoin finally or just opened up, because price feed won't be that great. It wouldn't give me a wide variety of history that I need. So that's just a tip for you guys. Especially I would say for projects that are layer 2, all right, you want to definitely find what exchange listed them first. KuCoin seems to be having good success with listing them first, so that might be a good one for certain projects. But again, if you're going to check it out, just go to coinmarketcap.com, look at the crypto that you're looking to want to trade for whatever reason, and then just look to see what exchanges is listed on, and then you can pull them up here. It'll be very quick. It'll be very easy and very quick to work out how far the price feed has managed to go, or which one listed it first. Okay. So with Ethereum here, we're only about $16. If the price closes $16 lower and stays within this supply zone, then we're steering gear for the price to possibly go short. So I'm watching carefully what the price does. If it continues in this way, we still have, according to my time anyway, GMT, we still have about, we have about 4 hours and 4 minutes left. Okay. And then after, the price will be making its way from there. And then so once we get the break beneath and the return here, if it does happen in that way, then I'm looking for this price point here. And again, if the inefficiency was so kindly to be filled, that would be even greater. And then another run. Who knows? As I said, when it comes to crypto, I'm looking at it from a fundamental perspective, which fundamentally we should be going long. And also from a perspective of technicals that are important to look at. Now, I don't use Wyckoffs in the same way that most traders do, because the market has machine learning. And now that Wyckoffs has become popular, the algorithm of the market is going to shift to be able to adjust and adopt for that, so it can manipulate traders using Wyckoff patterns. So I use a hybrid version, which doesn't fail because it's not based on a pattern completely. It's based on order books. So it's more based on the money in the market, which money transactions never change. You're either buying or you're selling. But that's for another video for another day. All right. So what I'll do here, let me pull up my Bitcoin also. I think I have Bitcoin with Coinbase as well marked out. If I don't, okay, I have a form of Bitcoin, but this is not the most recent one. This is another version. So let me see where I have the other. It's either going to be a Bitfinex or one of those, but I have them saved on the cloud. I need to get better at TradingView. All right, so here's the structure one that we have. The price is still within the bearish structure. You know what? It's okay. I can lean from here and just continue from where I am if I don't find it. So I'll just try and see if we can look at this somewhere else. What's Bittrex saying? Is that the one? Okay, so Bittrex is not here. All right. So what I'll do then, let me double just check where I put it. If I don't see it, guys, it's not a big deal. I can just use wherever I was on first, but I guess I got to remember after this. All right, so let's see if it's with Binance US. No, it's not. So that means that it's probably USDT here with the markings. All right, one of them has the best price feeds for us to be able to look at stuff. So when I'm looking at my stuff, guys, I always like to do this, but I just need to get better at remembering. That's all. So, or maybe it's the one calculated by TradingView. Is it? Yeah, right here it is. All right, so it is here. I've left this zone here so that you guys could observe. You know, let me know if you guys want me to start publishing on a TradingView. I think I might start doing it, but you guys let me know if you want to see my analysis there. I'll set something up so that you guys can see it. So what we have right here is this demand zone right here. The price has used it as a very strong zone of flipping. So let's break this down in a bit more technical terms for a moment. So I'm going to put my technical hat on and let's look at this. So when we had the price going from where it is down here to the all-time high, which was in April, the price returned here to, which was order book efficiency for pulling liquidity for demand in order to fulfill that new price. Once we had that, okay, and this is important, the price entered into this region and went long. When we had the first, I wouldn't say crash, but when we had the first pullback, okay, that could potentially have been a crash, which it ended up being one. Notice carefully that the price dipped lower, so I'll use this to explain it better. So we notice right here that the price dipped lower. The body of the candle, notice, stayed within this order block, and we saw a long not too long after. But we saw that we had a deeper dive into this area of liquidity. What is the market order book doing here? Trying to pull the dip, go back to the area of demand that in essence trading retracing its steps. Okay, so this retracement of steps here, when the price went long, notice we had a good strong long because there's liquidity here. The next day there was a strong buy up here that was sustained for quite a few number of days. All right, but then it all came crashing down when we had the break over here. So once we had the break past this area of demand, it became an area of supply. So this order block is a very important one because it's become a supply range for selling. It was one for buying, but now it's one for selling. Now I was expecting the reoptimization to happen sooner, but we've come back to this area here and we had a very strong bullish run. Don't get me wrong, guys. But now we've had a strong accumulation in this area, which is intriguing to me as to what's going on. Now, this accumulation in price here potentially could produce another short. It could be a short-term one, which is why I have the markings here. So if I go right here at A, and then also up here for B, and then down here for C, then what we should be in expectation is that if the price uses the same area of demand, then we should be going long to continue, and we should be going towards 60. All right, but we'll need a very strong close above this area to confirm the fact that we've gone back into areas of demand that we haven't really seen before this last crash here. So right now is a make or break moment for Bitcoin, and Bitcoin struggling at this area, whilst Ethereum is going long. I believe is a bit more fundamental than technical. I'm sure there are on-chain things. All right, there's things going on with USDC and USDT at the moment that may be affecting Bitcoin also, but we can talk about that another time. But for now, anyway, if Bitcoin was to go for a short, then I would expect it to come back to these areas right here, which is where we had the reoptimization of the first area of demand. So demand was used here, the price broke beneath, used it as supply. We had a break above this area here and a return. So the price would naturally, according to this order block, return to about 3,700 or 37636. Make sure I get the numbers right, somewhere around about here. And then it could take off again. All right, the fact, whenever we see a bullish trend, guys, and we can see that the strength of the bullish side is weakening out, and we go from a very strong and expansive bullish range to more of a cumulative range, that means that there's order building going on the order block, which could mean that we could be seeing a short here. Now, in terms of the fundamental difference here, I do believe it's down to this. So I'm just going to share this with you guys quickly as to what I think is going on with Ethereum. So I'm going to put this here. All right. So Ethereum, okay, number one, is estimated to be deflationary. Now, this is dated August the 7th. Now, there's something more recent that's happened here that I'm going to also pull up for you guys in a moment. But I just want you guys to get the picture of what's going on. So Ethereum, all right, there's been a shift with an update, which is allowing for Ethereum to become deflationary once it becomes proof of stake. Now, the London upgrade, okay, for Ethereum is starting to burn thousands of coins each day. Okay, while this is a welcome blow to Ether's inflation, we may expect it to take a deflationary turn in the future. Okay, so according to network data, over 4,418 ETH, or about $12.1 million, were burned in under 22 hours after the network implemented EIP 1159, okay, as part of the London hard fork. So with EIP 1159, users start paying a variable base fee for transactions that, instead of being paid to miners, is burned. Okay, so that means destroyed forever. All right. In addition, an optional miner tip. Okay, but this is far from the only change put in place by the EIP. All right. Now, what I'm going to do here is blockchains process transactions in so-called blocks containing many transactions. Now, to save space, I'm going to go all the way down to the most important part, because I believe that you and I know this. So as miners create new blocks on average every 10 seconds, they're awarded with one newly issued Ether, which is where Ethereum's current inflation rate is about 4% comes from. So right now, the inflation rate on Ethereum is 4%. Now, EIP 1159 allows for blocks to vary in size up to double the size that they were before. That reduces the network strain and nearly doubles the network's output, which is amazing. Okay. And in turn, throughput, I should put, that's the correct term. So the network's throughput in times of need, which is in turn expected to lower fees. Now, when the first crash happened in May, the gas fees, or the GUE, as we call it, was 3,521, which is like, I think it cost like, I don't know, like $500 to do anything on the Ethereum network because the blockchain was so busy because so many people were selling and another set of people were buying. All right. Now, this change could result in more Ethereum applications being practical and causing more transactions to be processed per day, which is very good because, as I said, a lot of projects, most of the altcoin projects we know of are built on Ethereum. Okay. Now, here's the part that's important. All right. So in the future, developers plan to do away with mining altogether and go for the more energy efficient version of blockchain transaction processing, which is the energy efficient proof of stake, which I've spoken about algorithm, which consumes a fraction of the electricity of mining and does not require specialized hardware that is often replaced. Okay. So where are we right now? So here's the important part here. According to Ethereum burning and inflation tracking device, you can use this as ultrasound money. If I drag it up here, it's a really good place you can go to. If you click on it, it will tell you exactly what's going on right here. So you see, if I open it, Ethereum burn per year, 2.1 million. Supply growth, all right, is at 2.8% per year and 5.4 million in terms of issuance. So you can actually watch this and see what's going on here. And of course, OpenSea would probably be burning the most because of NFTs. All right, we have Ethereum or ERC20, which is Tether. And then we have FTO and Fangang, and then Ethereum transfers. And then we have Axie Infinity. So here we go, guys. You can see over here what exactly goes on. OpenSea was always going to be the largest NFT marketplace, and for people to mint and do transactions, you're going to need some ETH. But anyway, coming back here to where we are, you can have a look at that in your own time. All right, with 10 million ETH at an average base price of 20 GUE, and a proof of stake consensus being implemented on the 31st of March 2022, so only a few months away, we should expect Ether to become deflation at the very moment it moves away from mining. And if it becomes deflationary, there's one precious word that is very important to many of us, which is it becomes, all right, I wanted to put the delay there, but it didn't work. Okay, but it becomes a hedge of protection against inflation. Okay, so that deflationary picture there means that it becomes a safety hedge from inflation, which is what all currencies intrinsically have, because the total supply, all right, and this is, if you're not too sure why, I wouldn't say hate currency, but I'm not a fan of fiat currency, as we call it, is because every currency in the world that comes from any country in the world and any central bank of any country in any place, all right, is inflationary by default because the total supply is unknown. There isn't a capped total supply. Theoretically, as I always say, as many trees as exist on the earth or in that country is how much money they can print. And to be honest, they can even go beyond that digitally. All right. So that means that the actual value of it can be reduced in a moment. All right. So if you're holding a million, if it's a total supply of 10 million and you're holding 1 million and you have a certain value that is owned, if they print another million, instead of you having a 10% share in the total supply, you have 5% share, which means you lose half of your wealth from that printing. So you can see the picture here why it's not good. With Ethereum, if it becomes deflationary, then it becomes the key word I was going to say, a store of value. Okay, so Ethereum is not only going to be useful for transactions and etc., but it's also going to become a store of value. So that'll be a high institutional selling point that institutions will definitely want to be involved in, because it can be a hedge during times of higher inflation and possibly currency devaluation in certain countries and a whole load of things. So be prepared, guys, and be aware. Now, I'm not going to go through all of the mathematics here, but really, this is one reason I believe that Ethereum is seeing that extra push in price, because of the active burning that's taking place. And another reason, guys, which I'm going to pull up here for you guys right now, that I think we're seeing this with Ethereum, is because of the recent situation we had with the Ethereum hack. So let me pull this up here for you, and then after we can have a look at that. So let's see here. If I can put this here for you, might help. Let's put this here. I like to use Decrypt, guys. So I'm going to be using Decrypt to show you this, so that is a bit better for you. All right, just give me a second, and here we go. So on the 27th of August, so not too far from now, we had the Ethereum blockchain splits into two, okay? And this was because of a software bug which affected more than half of the network, which can happen, guys. Now, the bug, all right, on Ethereum's most popular blockchain, created a fork. All right. Now that fork means that we had two identical blockchains, which again put Ethereum at a very high risk of having a double spend attack, which means that you could spend on one chain, and then before the other chain naturally processes the transactions, you can do another. That's what happens. And it is that double spend attack would be catastrophic for Ethereum and for people as well, because a lot of money would be lost. Okay, so a double spend attack, according to the definition from Decrypt, means that the same cryptocurrency is spent twice, essentially turning a cryptocurrency into a counterfeit, inflating the asset and lowering its value, which is very, very bad, and you don't want that. Okay, now the bug in question is only present in older versions of the client, or those who came before the GETH version 1.10.8 update, okay, also called Hades Gamma. Now, the bug was disclosed here, but one of the things that's important to understand, and I'm going to put this here, I'm going to scroll down, is that when it comes to this chain split, the recovery that happened from this is a lot faster. Now, it doesn't actually say it on here, but if I was to go and type it in here, Ethereum bug, all right, and I went to the news for it, let me see if I have it here. If I put this Ethereum bug recovery here, I think I can use this one. Or actually, I'll just use this one because it's probably the best one. So Go a Spot here is a good place you can go to as well. Now, I want to just show you the comments of the developer here. Let me see if I can grab this. All right. But in essence, what he did say, because it's not showing up here. Okay. He did say, one of the major developers that work at Ethereum said that it was a close shave, but they are working to develop it. Now, I know even though this is a bad thing, it didn't really affect the price too much because the recovery was easy to do, and it didn't, and they've created a very good way to be able to fix it. Now, the developer here asks everybody to update to the latest version here, and whatever the bug is or whatever's happened, all right, will be fixed. So at the moment, there's 2,875 synchronized nodes working together to mine together out of 3,988. So the percentage is only 64% that have been updated, but they're working on it. So really, it was a close shave, but the way that Ethereum has seemed to recover from it, I do believe is driving the price fundamentally. Now it's already going short. I don't think it was that much of a big push, but again, we are seeing this. So coming back to trading view again here, when I look at this, this is where we are now. I'm sorry, guys, that I didn't get the article as I want because I had a better one, but it's just not showing up. The price is still dropping at the moment, but this spike in price here, I do believe is the effect of the burning plus the fundamentals of recovery. It seems, I mean, really, if it was the market was to consider the fundamentals completely, then the price would have tanked because that's a very scary and dangerous issue, you know, but nothing, no harm has really been done at the moment. It was a close shave, but it just shows the Ethereum community's resilience against trouble. Okay, technology is not indestructible, guys. Neither is code, you know, indestructible too. So I've spoken a lot. I hope you guys enjoyed that, and I'll catch you on the next one. If you have any questions, let me know. If not, I'll catch you guys and take care.